And I definitely want to thank you for joining us here at BlockShow in Las Vegas. Where are you originally from? Can you tell our viewers your name and where you're originally from and what company you represent?
My name is Dmitri Senchenko. Originally I'm Ukrainian, but I've lived in London for many, many years. I am the founder of the Feron stablecoin. And we are basically have just presented for the first time in a public arena our model.
Well, thank you so much for joining us here in Vegas and presenting for the first time. For those of our viewing audience that they do not know what stablecoin is, can you please tell me what stablecoin? It sounds self-explanatory, but please explain what stablecoin is.
Absolutely. Well, it does sound self-explanatory, and hopefully a fully functional stablecoin will be exactly that.
Okay.
Now, I mean, we've all seen the price fluctuations of Bitcoin, Ethereum, and all the other cryptocurrencies. And what that does is make them essentially unusable as a daily means for transacting. Now, what we're trying to do is alleviate that whole issue.
How are you doing that?
I mean, this is the
How
trick.
are you making it How are you really making a crypto stable? Tying it into a dollar? You have a base? You have a purse of assets there? What do you do?
Well, the uniqueness of our model is we do not peg it to anything at all. Now, classically, people either use sort of fiat collateral, they put a bunch of dollars into the bank and issue stable coins, and you can always exchange them back for the dollars. Other people are basically not using collateral, but they're still pegging their cryptocurrency to some dollar a year or some fiat benchmark. What we do is we are creating a system which is not going to rely in any way on any external asset or external information. So our protocol can stabilize the price of a cryptocurrency without even knowing what price is. Now, it is quite unique mathematically, and it would take me a huge amount of time to explain, but it is in fact so.
Can you walk me through the rudimentary technology behind this?
Let's give it a shot.
You know what? For shits and giggles, walk us behind the technology.
If you put it that way.
All right.
Listen. Demand for money can be split into two parts. You have transactional demand and speculative demand. Well, transactional demand is money that you use every day, to buy stuff.
Right.
We don't care about that here. Speculative money is the money you hold in order to make a profit. So essentially, you're waiting for the price to rise. Now, as things currently stand, speculative cryptocurrency is held, in a bunch of consumer wallets, on exchanges, and you can't really track it. What we do is we create a central bank, which also offers anyone a range of deposits. Now, these deposits pay a riskless interest rate. So we create a situation where, let's say you have some coins which you're holding, but you're not actively selling them. There is absolutely no reason for you not to place them on deposit and earn a riskless rate of return. Systemically, what that means is that we hover up all the excess liquidity in the system and place them into a single structure. Now, the critical thing now is that suppose, price expectations fall and you want to sell your coin.
Right.
So first, you need to pull it out of the central bank. So what does that mean? You're sending a signal to the central bank which says that you are ready to forgo a riskless return in order to have your coin back and do something else with it. Now, if the central bank receives those signals on a systemic level, almost invariably it means that the price of the coin is expected to fall. So what does the bank do? It sharply increases interest rates. So basically it's trying to convince you to keep the coin in the central bank and attract more coins into it. But remember, if you're not pulling the coin out, if you're keeping it in the central bank, you can't place it on an exchange and you can't sell it.
Exactly. So
essentially we're decreasing supply on the exchanges and the price stabilizes. But remember, the central bank has absolutely no information about price. It is simply looking at what people are doing with their economic decisions. So it's basically blind stabilization.
How much of a core set of users do you need to validate that as a true statement?
That's actually an excellent question. In truth, no. I mean, in reality, the answer is as few as can be.
So you're saying that it's that true, it's that accurate.
I mean, it needs a market. I mean, the system needs a market.
Right.
So basically, you need some external price for a user to react to.
Right.
So if that external price exists, it means there is some sort of, at least a rudimentary market with some participants. How many of those participants there are, I don't know.
What are the risks in that? What are the risks that the bank is taking that they're not gaming the system by a lot of calls?
Absolutely.
Right?
Listen, basically the system, there are a number of potential attack vectors. Now, this whole thing can fail in two ways. It can fail to stabilize, or it can print too much money while doing it. Now, the first scenario is only possible if users of that system cannot interact with the central bank.
Okay.
Now, that fundamentally is an issue relating to the blockchain protocol, not the economic model. So if we pick the right protocol where censorship is not an issue, then stabilization should not be an issue either.
Okay.
However, printing money is completely within the purview of the central bank. So any user with no matter how few coins can start throwing money in, pulling money out, and thereby the interest rate will go up.
Right.
However, what happens when you do that is everybody who keeps money with the central bank benefits from your actions.
Right, right.
So essentially, you're not special. You're earning money for everybody else.
Right.
Moreover, we have a mechanism in our system which says that as soon as your money starts pushing the interest rate up, that deposit ceases to benefit from those increased rates.
All right. So you have your trigger. Okay. All right.
Yeah.
All right. That's fair.
Interesting design issues to deal with that.
And what should we expect to see from you in 6 months, and then in 9 months, and in 12 months?
Excellent question again. Now, we already have a functional testnet, which kind of showcases our monetary policy mechanics. Now, the next step for us, or essentially for any stablecoin, is to do a truly effective economic, adversarial rather, testnet. Now, to show you the problem here, imagine playing poker without stakes.
Okay.
People start behaving in a completely different way. Nobody cares. The whole thing breaks down.
There's no risk. There's no
And that is the same issue as every stablecoin has with creating a testnet. Without real value in the system, your mechanism cannot really be tested.
Right.
We have a way of solving that, which we're kind of keeping under wraps still. Again, it's a lot of mathematics, and if we're talking about the next 3, 4, 5 months, that's where it should kick in.
Okay.
Now, provided that it goes well, next is mainnet, and that is first half of next year, I would expect.
Is there a way that the Cointelegraph viewers can participate in the first round of testing, or that we can open something so they can engage a little bit earlier than most folks?
Potentially, yes.
Okay.
When we do release the details of the economic testnet, we should be able to have a portion of that testnet allocated to people kind of willing to engage with it.
Okay. I'm very curious about this. This is a very, very fascinating solution.
The whole space is extremely fascinating. It is extremely new. We are, all of us are in the dark. There is no theory in economics underpinning algorithmic monetary policy.
We're taking best practices right now,
designing it on the fly,
and mitigating as much risk as you can.
I mean, listen, we took the approach of starting from complete scratch, so we're not relying on any past economic theory.
How many people are on your team?
Well, we're sort of 4, but unless you're truly going public, you don't need much more.
I mean, it's already an expensive proposal. So bringing on that monthly burn on top of that with additional, I completely understand. Well, I got to say, I wish you guys the best of the best, and I absolutely want to come speak to you in another few months, and let's talk about an early entry into that and giving some of our users a way to really engage with what's happening, as I think the group will find this completely fascinating. And if you can even come within 1% of what you're saying is stablecoin, you know, I know who you will be very shortly.
Well, thank you so much. I'm completely overwhelmed, and I would love to speak to you again anytime.
It is my pleasure. Thank you so much for sitting down.
Take care.
All right. I told you. Easy.